founder and president at SVB Energy International. Sara, will those words from Marco Rubio calm fears?
Well, if we look at the price movements, definitely the prices has increased because of the geopolitical risk. But considering the scale of attacks, everything happened today. Looking at the prices that market opened on Monday morning and kind of at the time that closed, we see that just the prices stay still under the $80. So still the market believes that this is a short-term impact, yet we did not have any physical interruption of barrels. There has been attempts toward the energy infrastructures today. We definitely, as was mentioned in your program too, before even the Strait of Hormuz is actually and physically closed, the shipping has already been stopped in this corridor because of the basically no one wants to insure ships going there and very high rates of shipping. So the barrels cannot move. So the main concern is the flow of the barrels. There is not yet a missing barrels or lost barrels because of the escalation of the tensions. So if United States can somehow secure this corridor and have the flow again resuming within the short period of time, at least that's what the market is expecting. But also there are some inventories around the world, and also China itself that imports most of this oil from Strait of Hormuz has been stockpiling in the past couple of years, especially last year. And part of those imports are for its stockpiles, more than its actual consumption. So as of now, the market did not react in a significant, let's say, shocking way. The price increase has been very measured based on that idea that yes, this is going to be a temporary or measured risk to the oil flow.
And Sara, you mentioned China there. I mean, they rely quite heavily on this. Well, I suppose you mentioned they've been stockpiling, but other big consumers of oil will be looking for alternatives. That will continue to drive the price up then?
So this is we talk and put a lot of emphasis on oil. Definitely, when we are talking about oil, we have inventories as a buffer around the world. Also, alternatives. We have U.S. shale. We have Russian sanctioned oil that still could flow during this time. And also very limited alternative way to reroute some of the Saudi oil. But what is very important now is gas, because there's not much of an alternative for gas and LNG to pass through. And as we saw, the gas market reacted much in a more panic way to the current geopolitical tension rather than the oil market. So we have multiple different consequences, but oil market has been much more relaxed and measured in compared to the gas due to alternatives that there are to absorb as a buffer to the shock.
Sara, thanks very much for your thoughts today. Appreciate your time. Sara Vakhshouri, founder and president of SVB Energy International.